Hey guys, welcome to Venture with Joe and Cody. What if the house you need to sell is the only thing standing between you and the house you want to buy? We are talking
Mhm.
contingent offers today. So, welcome to the show.
Yes.
This is Cody Wilhelm with
Close
Residential
enough.
Mortgage. Yeah, it started with a W. I'm Joe Skipper with
Yes.
EXP Realty. Started with a W. So, yeah, we're good. We're going to be talking contingent offers today. What's up, my man?
Just living the dream. How you doing?
Good, good. I'm excited
Yeah.
for this show because I think Cody and I are becoming big kids now, and talked this over and are like, we should do kind of a more structured show, ish, so that we can kind of
Yes.
keep on track, give people the proper data, give them some good information. But as you know, if you paid attention to anything with Venture and Joe and Cody, we just talk, and we like to hear each other
Sometimes
talk.
we sometimes we have plans on a topic and we
Yeah.
never even get there.
Exactly. So we thought like, hey, let's try to organize this, give people some good information and data, and also we
Yes.
can still, as long as we're within the rails, we're going to be fine. So
Yeah, it's like we set up little bumpers like you do in
yeah,
bowling.
yes,
Like, all right,
exactly.
we're good.
We can do
Okay,
we
we're
can do
gonna
okay with bumpers.
we should hit a few pins.
Yes.
Like
Yes, we
it,
might
it
not
can't
always
be
get a
that hard.
strike, but we're going to
Yeah.
get it more often than we did before. So
Right.
Um, well, the first off, we just wanted to start, like, we'll probably start these podcasts with what we're going to do is Cody's stats and trends. So this is just going to cover, from Cody's standpoint, what the market's telling us this week, kind of anything that he has to add, any of the data that he has to add from the nerdy lending side of
Yep.
life, and kind of your
Nerd
thoughts
alert.
on that stuff. So Cody's stats and trends. Let's go for it, man.
Yeah. Okay, I've got a few here for you. So just, like we normally do, going over typical average interest rates. Right now, the 30-year fixed average rate is 6.67. That's through Freddie Mac. So like Fannie Mae, Freddie Mac, you have all these different institutions that will put out their average rates. It just kind of gives a ballpark idea on what is the average. And that's a 30-year. 15-year is around 5.9, 5.96. The 15-year doesn't typically get used a whole lot when rates are a little bit higher. When they start to come down, people will typically take advantage of the 15-year.
Yeah, makes sense.
FHA sitting right around 6%, and then jumbo is about 6.7. So, which is kind of funny because that average, our company specifically, doesn't necessarily fall in the same category because our jumbo loans are actually better rates than what our conventional standard rates are.
Okay.
But a couple things on the radar. So the Fed, they did hold their rates steady in July, and their next decision is going to be September. So as of right
Okay.
now, it's still kind of expected that they're going to probably hold unless something crazy happens. Feels like a holding pattern for the Fed. I think with inflation, the way that it's been, the Strait of Hormuz
Yeah.
being what it is in the war, like I just don't see a whole lot happening. So
This is a dumb question, but
yeah,
the new Fed chair, is there a new Fed chair? Like, I haven't even.
yeah,
Okay, because
yeah.
I haven't even
He
heard
got in
anything
May,
about
I
it.
think it
Yeah,
was. No,
I haven't
nothing.
heard anything
There was
about
a
it.
lot
Nothing like, there's a lot of mumbo jumbo about like, oh, this is gonna go one way or
Yes.
the other, and now it's nothing. Like,
Yeah. Well,
Okay.
and I think that there was a lot, like getting Powell out was for a lot of people like a big win, right?
yeah,
To where,
yeah,
okay, cool. Now we get somebody
Gonna be
else in
like-
there, maybe
yeah,
somebody that's a little more aggressive and not, what do they call it?
Yeah.
Reactionary. He's a little more proactive. But I think with what's been going on, there's just not really enough that, one person doesn't make the decision.
yeah,
But what was expected, or the hope, was that he was a little more focused on trying to be creative and bringing rates down,
Mhm.
where others have been just kind of like, let's just let it ride, let's
Yeah,
play it
yeah,
safe.
yeah.
Which, you probably make a good case for both sides, but overall, not a whole lot's changed. Nothing's really too different than what it's been for a while. So still sitting in
Man,
that
that
kind
was
of
like
mid
so
to high
not
sixes.
eventful. Maybe it was in your world. It was so not eventful. I couldn't
Huge.
even remember. Like, because
I
it was
know.
like everyone was talking about like how the end of the world. But that what I'm finding is a trend is that everyone, there's a lot of the end of the world's coming when Trump
Oh yeah.
makes any statement, and then nothing
Yeah.
really happens. So
No.
that's just
No.
another one of those that everyone was like,
Something
this is the
changes
end
for
of the
one
real
day and then
estate
it goes right
world,
back.
and at the end of the end of the market. And I didn't even know that I'm in the market, and I
No.
didn't even know someone was there. So
Nothing
yeah.
really changed.
Yeah.
So what
Okay.
about on your side? What
Are
do you
you
got
are
going
you
on?
done with your Cody's stats and trends?
I
I'm just
mean,
curious. Like,
I've got a couple other
we're
things, but
trying
I
to
don't know
stay in the
that they're
rails
really
here. Like,
right. That was kind of
Cody
my
and I are
rate
trying
stuff.
so hard.
Like, okay, here's a couple more. Here's a couple more.
Okay.
So like bridge loans and HELOCs, they're sitting around 7.5% interest currently, but I would say that number is probably pretty low.
Really?
A lot of what I'm seeing out there is higher than that,
Okay.
but that doesn't necessarily mean that there's not ones that are out there.
Yeah.
Um,
Okay.
Here's an interesting little stat for you. Homeowners nationally are sitting on roughly 11.7 trillion in tappable equity. So it's about 212,000 per mortgage holder as of mid 2026. So that tells you
Wow.
a lot of people have a lot of equity. A lot of
Yeah.
people.
Yeah. Yeah. That was really good. That was
Thanks.
really good. Like,
I hear when I listen to
that was
sports
so
radio, they
impressive.
use that drop a lot. And so it's like always, every time I hear it, a lot of
A
people
lot of
talking.
people. Like, I love it. I love it.
Yeah.
Well, that's good, man. Well, we'll move on to Joe's Market Watch. This is our next section on just kind of
Yeah.
what I can tell you what's happening around in the real estate world. So basically, I've pulled some data from the RMLS, the WVMLS. That's our sourced reports, and Redfin, all this stuff. And as of July, the median sales price in Portland was $555,000. Flat. It's been flat year over year. Average sales price is $632,500. It's up about 1.7% year over year. So year over year, still going up 1.7%. So your investment on average, what that means is basically your investment of a home is going up about 1.7% year over year as to this date. That fluctuates up and down, but you want to see the long-term trend going up. So having that is good, especially in Portland, because Portland has its issues, and people are talking about it nationally, and how it's it is what it is, and all what they think Portland is. So the fact that home prices on average are going up 1.7% is a good sign. Kind of bucking the stereotype or not stereotype of what people think of Portland. So the closed sales 2167 in July, up 8.1% from July of last year. So up 8.1% closed sales. So that's the fastest pace of the year so far. So that's good.
Oh, wow.
Inventory is going up slightly to 3.3 months of supply. Market time has actually been the fastest pace of 2026 at 54 days. We've talked about this multiple times, though, Cody, is like, be prepared as a seller to be on the market longer than you think. The market time for the Portland average right now is 54 days, but that goes up and down. And 54 days is basically 2 months. So think about that. You see the number 54, you're like, not too bad. But then when you think about it in real life, when your home's sitting on the market, that's almost 2 months of sitting on the market before someone gives you an offer. So just think about that.
Now,
Like, we've been talking that a lot. Go ahead.
out of curiosity, I've always wondered this. The time on market, does that factor in the closing? Like that's till closed or that's till off the market under contract?
Oh,
Do you
I
know?
don't want to quote that. That is a great question, and I've heard two stories on that. Hold on one
Okay.
sec. Um,
So I've always wondered that, like, because if I'm assuming it is like under contract because your typical loan process takes 30-ish days,
I know,
and I
and
feel
that's
like
what I
that wouldn't
think.
really factor into that number. But
Yeah, it stops ticking once the seller accepts an offer. So,
okay, so it
so it's
really is
time on
true
market.
time
Yeah,
on.
true time on
Yeah,
market.
interesting.
Yeah. Salem around median sold price 427, 448. Obviously lower than Portland. No offense, Salem, but you just sell for less.
Yeah.
About 46 days on market. Kaiser's 49 days. Vancouver and Clark County had the median around 490. It's up 3% year over year, so they're doing pretty good
Mm-hmm.
with theirs. Yeah, Vancouver's market is still being characterized as competitive. Multiple offers are common, some waive contingencies. So my thoughts on that is basically, I think that Vancouver, we are maybe seeing some people that are in the Portland metro area that are like, maybe we just see what
Yeah.
Vancouver has to offer. It's right across the bridge. Vancouver, in my personal opinion, I haven't been there as of way recently, but man, they're downtown, they're waterfront, like
Hmm.
it looks pretty cool. I think I told you once I went there and like a bunch of young kids like were all dressed up. We went to some nice restaurant and it was
Oh
like
yeah.
all like 20s. Like I was like,
Uh
oh
huh.
my, I am not meant to be here. I'm like the old man, like,
Right.
trying to sit in peace and quiet, and all these young bucks are running around in their nice
Yeah.
clothes. But yeah, the Vancouver area, just from a visitor standpoint, I'm like, ooh, looks pretty nice. So I wonder if we're
They've done a good job.
seeing that
Yeah.
from people. And what's Washington? Washington doesn't have income tax. Yeah.
No income tax. Nope.
So I think
We
that
just
we've
get
seen a lot of
taxed
people
on
that go
everything
over
else.
there. Yeah, everything else. You're getting
Goodness.
taxed. Everyone's like, "Oh, I don't have income
Yeah.
tax. I'm going to Washington." It's like, okay, well, you'll be taxed on everything else that
Yes,
Washington can tax you on. So pick your
dude.
poison. But
We get, and I know Oregon's similar too. Like taxes are, if you want, you want to get taxed, you
yeah,
stay
come
in the
here,
Oregon, Washington area.
come here. Yeah.
Yeah. Although,
It
you know, so much of it is like little. It's not even like which is probably bad. Right? You just get used to it. You're like,
Yeah, I think we're in abusive relationship, to be honest.
yeah,
Like we don't know, like we do this because they love us, type of talk,
right.
because I think you do see you see a lot of retirees. There's a reason they go to Florida.
Hmm.
There's a reason they go to
Yep.
Texas. There's a reason they go to Arizona is because it is much better on your heart and your bank
Yeah.
account when you go
Yeah.
there, And so I
Hmm.
think when we've lived here, we want to stay here. And so you just deal with what
Yeah.
it is. But I think there
Well,
are
it's like
people that
all
go
we've
over there
known.
like, wow, what a refreshing,
Yeah.
thing to not have to pay this in taxes or pay that in taxes.
Yeah. Odd
So
concept, huh?
yeah.
Hmm.
But we get what comes with the high taxes here in Oregon, we get an amazing, large city of Portland that we can walk around safely and
Yes.
have the Blazers in the Moda Center
Right.
that are this is so set on being
It's
here. It's just like so
yeah.
much comfort knowing that. Like,
It's all we need.
oh my, I'll pay
Just
the high taxes so we have
it,
that safe city to go through.
yes.
Don't yell at me if you're listening. Don't act like it. I hate Portland. I do love Portland. It's you're getting me down the rabbit
Yeah.
hole of the taxes. Because we pay like you guys, like you're kind of partial, like you're a business owner, but you're not, like in the sense of for tax purposes. Like we have to like put away every single bit of our taxes, like for every
Yeah.
single thing. It hurts my heart, like
Well, I bet.
to pull that money away. It does make you realize, like when I was working for the state police, it's like, yeah, it sucked. Like you pay it just it gets deducted. Whoop de doo. Like you
Yeah.
know, um,
You don't look
but
at
you
it though
do,
as much.
yeah. Oh no, not at all. And you start to think though, I'm like, now that I see it, I'm like, where's my money going to? Like I'm like an old man. Like,
Uh-huh.
where's my tax
Right.
dollars going to? Because I
Yes.
see it. I see it like literally pulling
Huh?
out of my paycheck that I could use it for something else. But
Yeah.
yeah, interesting. But I don't know how
Well,
we got into that. So
no, the thing that gets me, because I'm W-2, so it's already coming out,
okay,
and
so yours is coming out.
um,
Yeah.
but I every month I look and see like, okay, here's what my gross number is, and then I just kind of like take a ballpark guess on what the net's going to be,
Yeah.
and then I look at it and I look and I'm like, oh, because there's some
Yeah.
months where you have a better month and you don't really make that much more
Yeah.
because you go into a new tax bracket and
For
it
sure.
just
For sure.
hits you and you're like, man, there's a sweet spot for sure, but
Yep.
still not
Um,
sweet.
But that's my take on the market so far. I would say, like we've talked about this till we're blue in the face. We'll keep talking about it. It's a balanced market. Sellers, if you are looking to sell, you have to look now. Like buyers, you do have some flexibility, but buyers get pre-approved because some homes are selling fast if they're priced appropriately. We just had a listing that is super popular, and we had multiple buyers agents come in and say, "Oh, they're waiting on pre-approval. They're waiting on pre-approval," and
Hmm.
it's like we can't wait. So we've already moved on from them. So you can still miss out. Sellers for sure. The market is, 2 months. Like average on Portland market is 2 months right now, but we've seen 90, 100 days. Like we just had an agent that was on online that was saying that, he had 0 visitors for 60 days and got a full price offer. So we're just
No
seeing
way.
like, your home is not priced inappropriately. Don't always
Hmm.
think like something's wrong, like when you're sitting for a while. Sellers, if
Yeah.
you're planning to sell quickly, we need to price it appropriately. If you're thinking about selling in spring, it needs to be planned now. So that's kind of my 2 cents. So,
Yeah. Yeah.
well, we want to go on to the deep dive.
Yeah.
We are talking today. We're going into contingent offers in this rate environment. So, um, if you don't know what a contingent offer is basically telling a seller of a home that, hey, I want to buy your home, but I have to be contingent on selling my home that I have right now. So that's just the generic term of what a contingent offer means in the real estate world. Uh, when the market is hot, sellers are very hesitant to accept a contingent offer because there are a lot of variables that happen when you do that, because you are basically saying, yes, buyer, come buy my home. Also, do the same thing that I'm doing to you and
Yeah.
sell your home. And, but what comes with that is different timelines. You basically lay it all out for the seller to say, here's what I'm doing. Here, I'm contingent, but here's what I'm going to do. Here's what I'm going to get a contract. Here's what I'm going to do with all the stuff. So, anyways, that's just the basics of a contingent offer. Um, Sellers, especially in the short term, are hesitant to accept them. I would say don't be as hesitant as you think. Contingent offers are becoming more and more normal now. I'm seeing a lot of homes that sit on the market longer are taking more contingent offers with other buyers, and they're playing together well. I think like most of the time, buyers and sellers are working together. To make things happen with each other. I think this is just a different market. So don't just look at a contingent offer and say, ugh, it's gross.
Hmm.
Really look at the terms of this seller, look at the home that's being sold, that the buyer is going to have to sell, look at the, find out about what the pricing is going to be, all the various things, because, we've worked with contingent offers quite a bit on the buyers and the seller side, and they're really not as bad as you think. So you just have to go in with eyes wide open with that sort of stuff. Some of the things that I would say that make a contingent offer more competitive, you know, obviously the further down the road you are with listing your home. Like some people are like, hey, we're 2 weeks from listing our home. Well, that's not a great contingent offer. But if you are already listed, you can write a contingent offer. In that route. So that's going to be your strongest bet. You can start some timelines early. I don't want to get into the nitty gritty. If you do have a home that you need to sell before you buy, reach out to me and we can go over the different terms. But basically, um, you can adjust the terms for the seller. So, say for example, hey seller, I want to buy your home. I'm contingent, but I'll start all my timelines as a traditional buyer would with your home. So that kind of gets you into the fight, gets you into this sale, and makes you pay for inspection and start the loan process and all that sort of stuff. So it gives you gives the seller a little comfort knowing I'm going forward with this sale. I want to go forward with this sale. Some buyers will say, I'm not starting any of those timelines until I get under contract. So safer for the buyer, not as great for the seller. So there's a bunch of different things that you can do to make a contingent offer look better than just a traditional contingent offer. So if you do have that scenario, happy to go over it with you, and kind of the terms that would do that. Nationally, one buyer survey found 82% of buyers included at least one contingency, 23% specifically included a home sale contingency. Um, I want to clarify a couple of those things. We use in the real estate world the term contingency, like I'm a contingent buyer. 99% of the time, they're meaning they have to sell a home. There are other contingencies that you write in every sales contract: an inspection contingency, a suitability
Sure.
contingency, an appraisal contingency. There's all those sort of contingencies. But what we're talking about today, Cody and I specifically, unless Cody has other stuff he wants to go over, is a home sale contingency. So the stat's a little bit off in the sense it's saying that 82% of buyers included at least one contingency. What they're meaning is that they're including an inspection contingency and those sort of things. It's not that
Yeah.
82% of buyers have to sell their own home. I found this number kind of weird, not weird, but kind of low, that 23% are including a home sale contingency in their offer. I'm finding, I don't know, I don't want to say half, but it's closer to half than 23% that I'm seeing
Really?
anecdotally here that buyers have to sell before they buy. So that fluctuates, from our business versus someone else's, but from what we're
Yeah.
seeing is it's just been more and more common to see a home sale contingency. But
Hmm.
yeah. So, anyways, what about the lending angle for a contingency and those sort of things? Like, what do you see um, happening with that? What's your thoughts as a lender with that stuff?
Yeah. So whenever somebody is looking at potentially trying to buy before selling their home, the first thing that I'm looking at is, do they really need to be contingent? Because sometimes people will just think, oh well, I have to. I can't have both of them at the same time,
Yeah, yeah,
and that's probably a preference. And sometimes it does just end up being the case where you literally can't afford to have both homes at the same time, or you don't have the down payment until you sell that house.
hmm,
So what we'll do in that situation, if somebody can afford to have both, meaning they can qualify for having both those mortgages at the same time, and they have enough money to put down, then we don't need to make it contingent. They could close on the purchase and then sell the existing home, a couple weeks or a month after the fact, if they're comfortable with that scenario. And then what we do in that case typically is take the large amount of money that they were going to put down and we do a recast, which just applies the money towards their loan and it recalculates what their payment is. So that's kind of like ideal situation for everyone because the buyer can still get what they wanted. The seller can close on their timeline. That's perfect, right? Non-contingent in a contingent type of format. If it is contingent on the sale of it, uh, again, there can be two parts to it. One, if the contingency is, I don't have enough down payment, but I can technically qualify for carrying both of these mortgages at the same time, then we look at doing either like a HELOC or a bridge loan. And the main difference between the two is a bridge loan is intended to be a short-term financing solution. So it's like, that it's a bridge. It's your little gap
yeah,
between buying and selling. So they'll give you the money for your down payment using the equity in the home that you currently own, knowing that you're probably going to pay that loan off in 1 to 3 to 6 months.
yeah, yeah,
Whereas a HELOC, home equity line of credit, typically they're not going to be super happy and or sign off if they know that it's going to be closed in two
yeah,
months. So the big difference between them is the interest rates and the closing costs are typically going to be higher on a bridge
yeah,
loan because they're only getting your money and your interest for a matter of months, whereas the HELOC is going to be opened up in theory for a longer period of time. Um, so that's the solution for somebody that can qualify for both mortgages but doesn't have enough down payment. And then the other one that really makes it truly contingent, like we don't really have any other ways of moving this and making this work, is if they just don't qualify with their debt to income by having their current home and purchasing the new one at the same time. Their debt to income just can't handle it. Therefore, it's going to be a true contingent. Like there's no way unless we got a cosigner or somebody to jump on there. So that's what's going to make it more of that hard stop. A lot of times, people that I have helped in this type of situation, surprisingly, a lot of times they actually do qualify for both mortgages. If not, then they will do a bridge loan or a line of credit of some kind to
yeah,
just get the minimum down payment. Sometimes people don't even use a line of credit. They might pull from their 401k just to get the minimum because they can get that without penalty or anything. Use that for the down payment. Then when their home sells, they pay their 401k back. They're back to whole. They put the rest of
yeah,
it down. So you can kind of get creative as much as you have to stay within the parameters of how it all works and the numbers.
yeah,
You can find a lot of different ways. Sometimes it's a family member that maybe has, $20,000 that
yeah.
they could give as a
Just loan
gift.
you. Yeah,
Yeah, yeah. So there's a lot of options, but yeah, definitely from what I'm seeing on my side too, like contingencies, and I don't want to speak for everybody, but contingency on the purchase, on the sale of their home has definitely become more and more of a normal thing and less of a, nah, maybe, but
yeah,
let's talk to these other offers. I mean, obviously, if there's multiple offers,
yeah.
you might
You're
not be the first option,
for
but
sure.
maybe in a bumpable state or something to where you're at least on there and you're moving forward and hopeful that it's going to all come together. But honestly, from a lending standpoint, it's not any different. Some people, I was just talking to a lady the other day, and she thought that the contingent part of it was on our side, which it technically is. But I
Yeah.
was like, well, that's going to be something you're going to have to talk to the seller about. Like
Yeah.
we can just sit here and wait for all that stuff to happen. You
Yeah.
don't need
Yeah.
approval from us. It's going to be the person you're buying from. That's the real person that needs to agree on it. So
Yeah. That makes sense. I think I get what she would be thinking is that
yeah,
you're not loaning their contingent on giving you the money based on, so yeah, I
yeah,
see that. And it's interesting that all those options that you have. What I find more often than not, and I think it's a safe thing, and it's totally, I'm not knocking it because I probably would lean that way too, is people
hmm
want to just do a contingent offer based on the sale of their home versus like a bridge loan or asking a family
yes,
member or pulling from a 401k or, I see it a lot more often that they're just like, let's just see if it sells. If it doesn't,
uh-huh.
we don't get the house. I don't know if you see the same thing, but I think there's a lot like in our world, you get so numb to this stuff that I'm like, yeah, why wouldn't you just do a bridge loan or, you're
Right.
gonna sell your house. Like it's not like it's not
Uh-huh.
gonna sell. Like,
Right.
but yeah, I can see the fear there. The
Oh,
scariness of
100%.
it is a risk for like anything.
hmm
But yeah, I find that a lot more people like when I pitch your bridge loans or all that sort of stuff, they're like, yeah, no, like
Yeah.
we're just gonna see if our house sells.
Yeah. Well, I mean, there is so much more of a risk
Yeah,
when you
big
do
time.
that.
Yeah,
It guarantees that, well, guarantees a strong word. It almost guarantees that you're going to get that house and everything's going to come together. But at the same time, you could run into that worst case scenario where now you have a payment for your bridge loan, a payment for your new house, a payment for your old house.
yeah.
And if
There's
it
there's
doesn't
no out.
sell,
Like
you're,
once
yeah,
once you're under contract, like there's outs, but yeah, it's the home sale contingency's out if you don't use it. Like
yes.
you can't back out of the deal, because your home didn't sell because you're qualified for it. So yeah, there's a
hmm
risk to it. I think it's a little mitigated. I think it's overhyped that it's like this big deal. Like the bridge loan, for example, is like to
hmm
me you're going to pay it off. Like you're going to get it sold. Like if you're confident in your house selling, like if you're confident you want to move to this home, like the bridge loan's going to get paid off. It's a very temporary thing. And like 3 years
Yes.
from now, you won't even think twice about what happened. Like five
hmm
years from now, you won't think twice about what you did to get to where you needed to go. So,
Yeah.
but
Yeah.
there's risks with everything. So you got to talk it over, which leads us into kind of the buyer's corner this week with me and you just talking about, and since it's relative to contingent offers, I would say like obviously like in this particular scenario, if you're a contingent buyer, it's going over step by step with your agent and your lender of kind of the lender will give you the generics and I'll let Cody go into it. But like from the agent side of things of really going over the step by step of what writing an offer looks like, what it looks like for your home that you have to sell, the timelines, get really specific about, the different timings that you need to do. There's all sorts of new timelines besides a real estate sale, buying a home and the timelines associated with that. You now have timelines of what you need to do with the sale of your home, how quickly it needs to be listed, how quickly it needs to get under contract, how quickly that once under contract it needs to sell. There's a lot of like moving parts. It can be done. It's done all the time. Having a good agent kind of walk you through that is critical to this because if you don't, you can run the risk of similar to the bridge loan, I guess, is like you run the risk of either losing the sale of your home, which then in turn loses the sale of that one. You could lose earnest money. You could, there's all sorts of things that are moving around. It's not as easy as it might look on paper. So I think from my standpoint, it's just getting with an agent, looking what that looks like.
hmm
If you have to go that route, kind of the timelines, what you want to do, what you feel comfortable doing, and writing the best offer based on that. So on the lending side, what sort of tips do you have?
Yeah. I mean, uh, biggest tips I'd have are, you know, finding out what is realistic for, if you did want to pursue it and not have it be contingent, looking at what those options might be. If it is contingent and it does need to be contingent, then I think it's just more on the planning and structuring of documentation, because if it's going to take another extra 2, 3 weeks, maybe a month, who
Yeah.
knows how long it might take, prepping them on keep your hours the same with your work. Don't do anything crazy there. If don't move around money. Like we're going to have to keep looking at these documents until closing. So
Yeah.
keeping things on track. for some crazy reason, it always feels like people go out of town when they're buying and selling. They're
Yeah,
like going on vacations. They've got stuff, which is fine. You don't necessarily, I'm
for
not saying
sure.
you can't do those things, but just from our standpoint, because in some cases, you having some less hours in a pay period might not make a difference at all. Some
Yeah,
people,
yeah.
we might have to be trying to use every single dollar that we can, and each paycheck gives us a new average on what we could or couldn't use.
Hmm.
So a lot of it is just like let's just keep things as tight as we can throughout this process, because it might be a little bit longer than what we're used to. It might
Yeah,
be,
yeah,
normally it's 20 to 30 days. Now we might be talking 45 to 60 days. So
yeah,
let's just kind of stay on top of things. But nothing too crazy has to happen. It's just being aware that we might need a new document. We might need a new pay stub. We might need a new bank statement. So let's try to keep it as clean as we can, because there's already a lot of moving parts. And the last thing we want to do is have something
for
that's
sure.
really fixable and preventable, have it throw things off. And now we have to wait another 2 weeks to get another pay stub
For
and
sure.
yada, yada. So,
Yeah, this is one, like I would say, like in this particular deal, is really just staying in communication with your agent and your lender to kind of
yeah.
make sure you're on track and make sure you have an agent and a lender that knows what they're doing and done this before and can kind of help you with that. This one's, I think all sales need to have a good agent and a good lender, but for this one
Yeah.
for sure needs somebody that knows what they're doing and keeping you on track. So really just stay up to date and on track with that stuff and have people you can communicate with to do that.
Mm-hmm.
We stayed on track, man. We have a couple
We
other things that we
did.
could have gone on to, but I think
Yeah.
we're good right now, and we did it. But if you guys have any questions,
We
we would
did.
love a little more interaction. So if you do have any questions or anything like that for Cody or I that you have regarding contingent offers or something you want us to talk about, in the next episodes or anything like that, feel free to drop comments wherever you're at. Reach out to Cody via email or text. Reach out to me via email or text and say, hey, I want to talk about this topic online, or I want you to talk about it. If you want to be on our podcast, we'd love to have you. If you're a business owner, if you're
Yeah.
an employee, if you're whatever you are and want to kind of advertise your what you've got going on, we'd love to hear about people in our community and how they got to where they got, where they're going, and what the deal is. So
Mm-hmm.
I think that's it, my man, for this
We
week. I
nailed
think
it.
we stayed on track. Good job.
We did. The bumpers
So,
worked.
yes. So I guess until next week, guys, like and subscribe to Venture with Joe and Cody. We're here every week, kind of helping out with the various topics for buyers and sellers, and hope you enjoyed it. And we'll talk to you later, man.
Awesome. We'll see you later.
Okay.